September 9th, 2023. The only measured move on the day was from the 1 open to the 5 open about. That's about where we got to. It's also kind of a wedge on the way up. I think something that's important to keep in mind on a day that trades like this is that it is obviously a trading range and you can trade it like a trading range, but it does also have a bear slope. It's kind of something to keep in mind. The channel line's kind of crude, but you can see it's essentially a bear channel. So while it's okay to be buying in here, looking to get a bounce to the 30, I would say the 34 close was a reasonable target. You just kind of have to keep in mind that it is still a bear channel. You're still getting lower lows, right? So you still have this low and that low is below it, and then that low is below it, that low is below it. And you're still getting lower highs here, here, and here. So I think that's important to keep in mind. Bar one, good bull bar closing near its high. Probably enough for a small second leg up. And I believe, it was breaking above yesterday's high, but it'll be interesting to see what the follow through looks like. If you get good follow through, you could get a bull trend day today, but it's unlikely that you'll get the good follow through. You can see on bar two, bulls got bad follow through, which tells you it's more likely going to be a trading range. Bar three, outside up. It's not a very good buy or sell. It's really just an expanding triangle on a lower time frame, tight trading range. Bar four, still a tight trading range. Some bulls look at it as a high one and a swing buy, but you have to keep in mind that we're probably going to be pretty sideways here considering how tight this trading range is right here. So probably sellers above, probably buyers below. And then you get bar five. Bar five, sellers above bar four and a potential swing below bar five, but this is, decently tight. So I'm not too sure I'd want to sell below five. Maybe if it was a bigger bar. And you can see any bear who did sell below five scalped out with a small profit during six. But it's important that bears are able to make money selling below bars, because if bears are able to make money selling below bars, it means that bulls are going to be less willing to buy above bars to look for swings and stuff, or they're going to be less willing to buy the close of potentially any of these bars because bears are able to make money here. Big surprise on bar seven. Probably any bears who were short and waited for the close of six were disappointed in six. And you can see on seven, we traded back down to around the entry price of the bears who sold below five. And those bears just started buying back shorts, causing seven. Big follow through. But something to keep in mind is that it's probably a trading range day. So we might have to get back to the six high. And you can see we did end up getting back to the six highs over here. And that's what causes this support. 9, bull bar, closing near its high. You could argue it's 3 pushes up and some kind of wedge. And then 10 and 11, good follow through for the bulls, but maybe going to be a little bit more sideways because it's 3 pushes up now. And you have stop order bears able to make money here, and limit order bears who are selling above pretty much anything and selling more higher should be able to make money, and they have been making money. So, it's reasonable to think that bears who are selling above this and selling more higher were going to make money. And you can see that's exactly what happened on 13. That's 13. 13 is an interesting bar for me. So you do have an open body gap with the 5 open and the 8 close. And so it's a little bit more bullish, but it might be a trading range day because of the reasons I had mentioned. Stop order bears making money, limit order bears making money, and 3 pushes up. So these become magnets. And you can see we essentially had like the 26 low as a magnet, and that's what the 34, the 34 close is just a vacuum test of the 26 low. And, the 36 might just be a vacuum test of the 32 high, things like that. This is just a vacuum test of the 56 low, in my opinion. And so that's something to keep in mind when you start to get moves like down in a trading range day is look for the magnets and look for what is the market actually doing here. It's something you should be asking yourself. Like what magnets is it looking for? It's not just going down for no reason. Especially on trading range days, that's an important thing to keep in mind. So bar 13 is a big bear bar. It's still always in long, has been the whole day, but this bar kind of makes bulls think twice because this is good enough for a second leg. So even after you get the pullback on 14, that 15, probably going to be a second leg. And you can see that 15 essentially trades down, and once it trades back up and closes, bulls are so disappointed in in the fact that the bears got 2 strong legs, and now this is a pretty tight channel, so that they basically just sold out on the close of 15 and caused 16. And any bulls who bought below 14 and bought more lower, were able to get out around basically when 15 opened, they sold the market and caused 16. And sellers above 16, not surprising, it's a high one. during 17, and then 18, you can see it's essentially 3 pushes down, 13, 15, 16, and 18. And you get 3 pushes down to the high of 6, where you find a bunch of buyers. So 18, while it looks big and strong for the bears, it's just a vacuum text of the 6 high. And something to keep in mind is higher time frames. So you know that wedge in the beginning of the day was a breakout on a higher time frame, like here. And you know that is strong enough for its own second leg. And so it's not surprising that we end up getting a second leg up here. So while as strong as this is, it's probably not going that much lower. So you get buyers here, and you can see anyone who sold the close of 18 was disappointed in 19, got out around break even during 20, big bull bar on 21. Some follow through 22. Probably this 20 and 21, 22 is good enough for its own second leg up, but we're also probably going to get back to the 20 high. And so when you get 23 and 24, it's follow through for the bulls, but it's just bare minimum follow through, and it's really not all that good. It's more of trading range behavior. You probably have sellers up around the 12 close since they bought anywhere here, and they should be able to get out to break even, which they are on 25. And 26 inside bar, you could argue it's 2 legs up. It's really not that strong right now. I don't think I want to be buying. 27, follow through for the bear bar, mostly because bulls selling out around break even causes a bear bar. Maybe an okay swing sell on 27, sell the close, hoping to get back down here. And you get follow through 28, but it's just a test of the 20 high, which is what happens on 29, which is why 29 gets support. And then bears, this is enough for a second leg down. So bears get 2 legs down, 30, 31, 32. You can see 30 and 31 are essentially just testing these lows. Whenever you get like a magnet, like 6, and then you get a continued move and it pulls back to it, you should instantly be thinking, by, this point, you should pretty much be thinking this is the trading range. Like, we're in a trading range. This is the low. This is the high, especially once you get this bounce right here. If you're thinking trading range, this is the low because of this magnet, and this is the high. And after you do that for enough time, you'll start to be able to think about it from up here. So once you start to get the drawdown on like 13, and you see 13, and you start thinking, well, maybe we're going to go to the 6 high, and there are going to be buyers there. And if there's going to be support here, and there's resistance here, that's probably a trading range. My bad. 33 bull bar closing near its high, but probably getting back to the 32 high. 34, good bull bar, but it's just a vacuum test of 26. If you're going to take a buy like 34, you need to just flatten at the market on 35, in my opinion. You're buying in the top of a trading range. If you're buying 34, it's low probability, and your risk reward is not very good because your risk is pretty big. You have to put your stop below 43 or 33. So I would just, if you're going to buy the close at 34 and you see 35, I would just hit sell the market basically and flatten your position. And that's exactly what happened. And that's why 36 is so strong, because any bulls who were buying up here were disappointed in this and they just sold out of the market. They didn't even bother trying to get out of break even. They just took a small loss because they know the risk is we get drawn down here, and they're, trading ranges have bigger pullbacks than you want pretty much always. And so that's what happens on 36. Bulls know that it's going to be a bigger pullback than they want, and they might not be able to get out at break even immediately. And so they just flatten at the market. There will be bulls buying below 35, expecting that this and this is strong enough for a second leg up. And you can see that's basically what 39 did, is when it tried to get back to the 35 close. They weren't quite able to get out, but it tried to get back to the 35 close to let those traders out at break even. 37 follow through for bears, but disappointing, gets bought up. And so a lot of bears, some bears will start getting out, and bulls will start buying around here, assuming that, it's probably going to be a trading range. 38 inside bar, disappointing. You look at this as, down, up, down, up. So it's 2 legs essentially. If you really want to think about it, 35, down, up, down, up, down, up, maybe a wedge on a smaller time frame. So it's really not all that excellent to be short right now, because that we're probably going to get some sort of bounce. 39, I already talked about 39. 40 is a good bar, but it's probably just a second leg trap. If you sell 40, you should be exiting pretty much on the close of 41. That's not what you want to see. If you sell 40, you're looking for another bar exactly like 40, or 36 would be even better. And you're hoping to just get pulled into a trade and have a strong close below the 6 low. And when you don't get that, you just need to get out. So bears getting out, causing 42. And then you get 43. This is a tight enough channel that it was likely you were going to get a second leg, similar to how this is a tight enough channel that it was likely you were going to get a second leg. So bulls, bulls know that this is probably just a pullback, the same way that bears know that this is probably just a pullback, and they're probably going to get at least another leg down, which is what 43 and 44 is. You can see buyers below the bottom of the range, 41 during 45. I think 45 is an okay swing buy. It's 3 pushes down, reasonable wedge bottom, and you get good follow through on 46, but it doesn't quite close above the moving average, which is disappointing. And then you get 47, and if you see 47, you can just get out around break even. And I think that's the best decision you can make, because you're disappointed. You know that 45 and 46 is probably enough for a second leg, but 47 is really disappointing. And in trading ranges, the pullbacks can be pretty deep, and you might get your stop run. And so 48, bad follow through for the bears. So any bears who are selling below this, disappointed this, they're going to be flattening. You can see 49, probably sellers above 48, and then buyers below 40, 49 during 50. So it's a potential, wedge double bottom now, but it's a tight trading range, so you have to keep that in mind. So if you're going to buy above 50, you want really fast follow through. You don't get fast follow through on 51, so you can see those traders, bought above 50, and then disappointed 51, get out around break even during 52, and that causes a big bear bar on 53. 53, do you really want to sell here? Bulls bought it. Bulls bought it. Bulls bought. Bulls bought. Bulls continue to buy at this price, so I don't think I want to sell 53. I think 54 is a reasonable buy. Bears do keep selling this price as it is a trading range, but 34 close is a reasonable magnet, and so you might buy there hoping that you're going to get a move to essentially. Sorry, I was checking something. You're hoping to get a move, somewhere up here. 55 is good follow through, but again, you get disappointing follow through on 56. It's not as disappointing as 47, but it's disappointing enough that a lot of traders will exit below. And you can see that's exactly what these traders did. They just sold out pretty much at the market. And we got a big bear surprise on 57. And you can see 56, 57, you can look at it as the spike phase, and you get a spike and channel down. And they did keep the gap open, right? That's something that's important to note, is 45 low was not able to overlap with the 62 high. And so you get bad follow through 58. 59 sellers, you can see buyers below 59 on 60, and second leg up. So it's essentially a 2-legged pullback. And then we went mostly sideways in here. This is a low too short, but you're kind of selling the bottom of a tight trading range, and the downside could be limited. If you do sell it, you're okay with this follow through, and you probably have to get out, above pretty much any bear bar. I mean, if you think about it, if you're short and you see this, we could pretty easily rally to the moving average, and it's pretty late in the day. So it probably makes more sense to just exit right above, 71 if you get triggered, or 72, and you have stops around here. And that's one of the reasons why this bar popped so much, is because, once traders start getting out, you just start to bounce, and that contributes to the rally. Plus, traders know that we're probably going to close these gaps. So that's, they trade in accordance with that. The daily chart, probably this is strong enough for a second leg down, but if bulls get one more bull bar, that's probably strong enough for a second leg up. So you have to keep that in mind. Just started weekly closed. It's a low one short for the bears. I think we'll probably trigger below this, but this was strong enough for a second leg up, so we might have to test this close before we go a whole lot lower. You can see we basically got back to that low to let lower bulls out on this last 2 weeks ago. Yeah, that's it.